Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a technical look at some of the major currency pairs. I'm going to take a look at three currency pairs for you. We're going to start with the euro versus US dollar. Now, this currency pair has been confined in a range over 16 trading days through here, in between the yellow lines right here. The market stayed between those lines. Yes, there are moves a little bit below it, there are moves a little bit above it, but no closes above those yellow areas right there until we came into Tuesday and Wednesday of this week. We started to see more value being developed below the yellow area, and we moved down toward the 109, 70, about 80 level here in trading yesterday, bounced off of that level in trading here today. We had Mario Draghi speaking. That caused a lot of volatility through here, and the market moved down and took out the low price, but only by a few pips, and we've seen a rebound back to the upside. Now, in the process of this up and down action right here, we see the price moving above and below the lower extreme here at the 110.23 to 28 level. That's okay. The market was preparing for Draghi's testimony, got it, started to make its move, couldn't figure out which way it wanted to go, and over the last 4 or 5 hours or 6 hours or whatever has remained below this area, below this yellow area. And so we'll give the benefit of the doubt to the sellers that as long as the price can remain below this area, the bias remains more to the downside. Bias remains more to the downside. And what's so important about that, especially as we head into the final trading day? Well, one of the reasons is if you go to the weekly chart and take a look at the average trading range for one period. So I put in the ATR for one period, and what that gives me is the range for each of these weeks. And the range for this week is only 105 pips right here. And if you go back in time, you have to go back to this week in December of 2014. Either that was the week of Christmas or the week before Christmas. That week came in at 108 pips. And so what that means is it's been over a year and a half, year and 3/4 or whatever since we've had such a week that's been more narrow than Christmas week of 2014. And that's a long time, and I don't necessarily expect that records are going to be broken unless they're broken, okay? So if we are anticipating that the 105 pips is going to become 120 pips or 130 pips or something along those lines between now and the end of the week, then what do we have to expect? We have to expect an extension of the trading range. And where might that extension be? Well, the high for the week is way up here, and the well, it's only 105 pips away, or less than 100 pips away, and the low for week is here. But we are below this this area right here at the 23 to 27, and have been below for the last 5 or 6 trading hours. So I have to give the nod to the sellers that the potential exists for a move outside of the range to the downside here would be the best bet, or the bet that that is closest, if you will, and also supported by the technicals. We're below this 23 to 28 level, so we've got to give the benefit of the doubt to the sellers. So that's the euro versus US dollar. Look for sellers against the 23 to 28, or that's a risk for traders. If we get lucky and the market extends the trading range, we could see 60, 75 or so pips to the downside, which would take the price down toward the 109 level, 109.25, something like that. Maybe even toward this bottom side trend line. We'll look for that along as well. So that would be sort of the trade for the euro versus US dollar over the next 24 hours. Let's take a look at the Aussie versus US dollar, only because we're near a lot of technical levels here, and the market has held some technical levels in trading here today, or trading over the last couple days. This is the 4-hour chart of that pair, so this would be probably yesterday's trade right here, but the market held the 100-bar moving average on the 4-hour chart. This is the 100-day moving average. This is a 200-bar moving average on the 4-hour chart, and this is a nice little trend line that the market had 1 point on. We had 2 points on right here, and in trading here today, the market fell down and came right down to that support level and bounced off of that level. So in between these two technical levels, the trend line and the 100-bar moving average is where we sit right now, and where the market has a decision to make. Does it want to perhaps move to the upside here? Do we want to break through the trend line on the downside? That would be the trade for the day. Now, if you are more bullish on this currency pair, you can lean against things like the 200-bar moving average. Why? Because the market just tested that level, and the market found support against that level. It also corresponds with the 38.2% retracement of this move right here. And so there's a couple of reasons why there should be support against the 74.72 level. So if you're bullish, the Aussie versus US dollar, you might want to think about buying against this area right here, with the potential for a move above the 100-bar moving average between now and the end of the week or whatever. And if you're lucky, we get it up through that level. But the risk is fairly low right here. You can risk down to the trend line, and with your hopes that we move further to the upside and maybe test the 100-bar moving average. Let's just call it that. Now, if you're more bearish, this currency pair, what do you want to see happen? Well, you want to see this 200-bar moving average be broken, right? And you want to see the 38.2% retracement be broken. And then you're going to have to deal with this trend line, of course. But if the market should be able to get below that trend line, then we have the opportunity to move down toward the 50% retracement, which also corresponds roughly with this low right here. That was low from, I think, our last week's trend, because we're on the 4-hour chart. And so that would be a target on the downside. So again, you'd probably be risking, if you sold a break of this area, risking a break back above the 100-day moving average at the 74.85 level, with the hopes that we get through that level and start to move our way toward the 74.09 level. So risking a little, hopefully making more than a little. That's another trade that I'd be looking for here in the Aussie versus US dollar. Now, my third trade goes to the dollar versus yen. I'm going to stay away from the pound versus US dollar. I'm going to go to the dollar versus yen. Why that currency pair? Well, let's look at the technicals here for that. And I have a couple of yellow areas here, okay? Yellow areas that define risk defining levels, and I'll show you why. If you take a look at this middle area right here, we had a low right here, we had a low right here, we had highs through here, we had high through here, we had a little break here on the Brexit. Let's discount that move. Then we had a high right here, we had highs through here, and in today's trading we moved to the upside, then came back down below, and this last corrective move got just above that 106.42 level. So we are staying below this level right here, below the 42 level. And the next yellow area corresponds with this area right here. And similarly to the other area, we have a high right here, we have a high right here, swing high. We have another swing high, another swing high right here. We fell below that level on Brexit day, and then we came back up to the level right here, found resistance, broke above it, used it right here, went a little bit below it here to test the 200-bar moving average and moved higher. And so that area as well becomes a target. So if we're going to keep the bearish bias here for this currency pair, what might you expect? Well, you might expect that the market would go down and test this yellow area right through here. And if we get below that yellow area, then we're going to be looking toward our 200-hour moving average. Last time we came down and tested it was right here. The market bounced off of that level. And so we'd be looking for that, and then we'd potentially be looking for the 100-bar moving average. And we broke above it here and sort of held it up here on the Brexit day and fell below it here. So the market reacts to that as well. So that's the trade on the bearish side here for the dollar versus yen. If we're able to stay below that level and move through our targets 1, 2, 3 on the way to the downside. So that's a dollar versus yen. Now, if that doesn't pan out for this currency pair, we have this other yellow area on the top side where we found resistance in trading here today. That came in at the 107.49 to 65 level. So if you're bullish on this pair, that would be a target on the top side. And where does that level come from? Well, I have to go back in time and I have to go back to all these levels and here. And the market remembers these levels, by the way, folks. All right, because they know that we had high right here, swing high right here. We fell below it right here, and then we used that area as a see, level of resistance, and then we moved above it right here, and over here we went a little bit above it on a correction, but fairly found quick sellers against that level, and started to move back down again until today. The market came back up to that yellow area, and what did traders do? They sold against that level. Why? Because there's resistance. Risk could be defined and risk could be limited against this area right here. Not only the fact that we had this parallel trend line up against it. So if you're more bullish, the dollar versus yen, what do you want to see? Well, you want to see the price move back above the trend line right here and back above this first yellow area. If we get above the yellow area right through here, then that should open up the door. Remember, we've tried to find resistance against it here, and we found it. That should open up the door for another move, another test up toward the 107.48.49 level, the 65 level. That's the hope. Whether we get it or not is really unsure at the moment, but we have the plan, we have the technical levels, we have the tools that define those technical levels. It's up to the market to do what it wants to do. Do you want to go higher? Do you want to go lower? In a lot of these different currency pairs, there's that choice that you have as a trader. Or a choice where you can lean against risk and define risk and limit risk, and that is how you do it. My name is Greg Michaelowski. Good fortune with your trading. Bye-bye now.